Welcome back, traders. So in my last video, I said I was going to take a look at the dollar index and give all of you my higher time frame analysis. That's what we're going to do today. I'm recording this on July 5th. I hope you all had a good July 4th holiday yesterday. Let me know if you've enjoyed your holiday with a thumbs up on this video, or better yet, let me know in the comments. And let's get started by taking a look at the monthly chart. So taking a bird's eye view of what the dollar has done in the past year, we see this rally up, taking out the buy side liquidity and rebalancing this large inefficiency back in November 2022. Now, if price would have stayed above this fair value gap, I would have thought we would have another bullish rally looking for this high. However, since we rejected and we dropped so quickly, going below all of this up move, we have a change in the state of delivery, and I'm looking for dollar to seek sell side ultimately below these equal lows. Now remember, this is a monthly chart, so it may take a few months to a year for price to actually get down to these lows, but this is my long-term bias for dollar as long as we don't go back above these fair value gaps. Now looking at these fair value gaps, we have a SIBI here, but then to the left we have a BISI that's about the same size, and then even more left we have another SIBI. So if you think about how price has moved, it went down, then up, then down again, and now it looks like it's leaving this area of consolidation. This consolidation, we did a lot of work in here, so all of this is considered a balanced price range, but more specifically, I'm looking at these fair value gaps that all overlap as a balanced price range. So even though we have a SIBI here, I don't really see why price would want to come back here. We've already done a lot of work at this price level, so it's not really inefficient. But I would keep my eye on this candle. This is the month of May, specifically 50% of this upper wick. And you can even grade it with 25% and 75% like I did here. And don't forget, the base is that monthly rejection block. So even though I don't expect price to come back to this SIBI because it's the balanced price range, it would be acceptable if we come back into this upper wick, hit one of these price levels, and then start dropping for the sell side once again. Now, you may ask, why am I not including this fair value gap? Well, this candle right here is the month of July, and it's not done forming yet. We're only 1 week into this month, so there's plenty of time for this to go up, maybe back into this wick, and then if that happens, there won't be a fair value gap here. So we'll have to wait until next month to see if we get a fair value gap here or not. Now, one more thing before we go into the weekly chart, I just want to go ahead and take a projection from this high down to this low, which is the low of the consolidation. And you can see that -1 standard deviation on the projection is just below this low, but not below this one. So I'm going to go ahead and adjust the sell side to here, just above the -1 standard deviation. Now, I'm not saying it can't go lower below this low, but I want to play it safe and just not get too greedy. Now, also, you'll notice this fair value gap here. We've reached it last month, and we're currently working in the lower half of it. But why do I have this fair value gap here? Well, if you take a gradient from this high down to the low that we're projecting our sell side target to be, this is the first fair value gap that's going to be at a discount level. We've reached it, so this is definitely going to be an important fair value gap to keep your eyes on and see how price behaves around here as we go into the next few months. All right, so now zooming in on the weekly chart, okay, we have the sell side of liquidity down here. I'm just going to go ahead and zoom in a little bit. From ICT's lecture, you'll see that he mentioned the sell side below this swing low and this swing low. And I went ahead and drew a Fibonacci here with 50%. So from the lecture, you know that this purple line here is going to be 50% between this swing low and this swing low. And this is what he said is the event horizon. So I'm taking note of the event horizon. Should we pass this event horizon, I would expect price to quickly run for the next sell side liquidity below this swing low. It hasn't done it yet. We're getting kind of close, but let's go ahead and zoom in a little bit at the most recent price action and see if we can get a little bit more detail on the weekly chart. Now, zoomed in, there's a lot going on here, so let me just remind you what all these price levels are. So we have that monthly balanced price range. I don't really want to see price come back into it. We could, but I just don't really expect price to come back into this balanced price range because we had a lot of consolidation before. Now, if you look at this entire move here on the weekly chart, we don't have any inefficiencies here. You can see all the wicks are overlapping with each other until we get back over here. So we have a weekly SIBI here that's like right below this balanced price range. So we could have price come back into this weekly SIBI. And notice how all these lines here, this was me grading that monthly upper wick. So we have the rejection block here. 25%, know how the 25% is at the low of that weekly SIBI. And then we also have 50% of that upper wick. Yes, there is a weekly volume imbalance, but since it's contained within this weekly SIBI, I just went ahead and not draw this in because I don't want to have too much on the chart. But just using the weekly SIBI, we can see if price does come back up here, I would expect price to tap into maybe the 25% or the 50% of that monthly upper wick before we start to reject and go lower. Now, there is a chance that we may not come back into this price level because you can see that just last week we did put in another weekly SIBI, and this is right in the middle of that monthly BISI. So with that monthly BISI, we could look for it to be used as inversion. So price could use this as resistance and just work in the lower half, maybe go back into this weekly SIBI, and that's it. We may not come back above this candle at all. And if that does happen and we start going lower, remember the event horizon, if we start going down below this low, last week's low, and start going down below the event horizon, then I think the dollar index will probably want to run for the next pool of liquidity down here for that old sell side swing low. Okay, so I think we've pretty much covered everything there is to cover on the monthly and the weekly chart. But here I went ahead and go into the daily chart just to get a little bit closer look to kind of see a little bit more detail. There's not too much here, but you can see we have a lot of inefficiencies here. So we could be going above this weekly SIBI. It doesn't necessarily have to be the be all end all of all resistance. So we could go back above this weekly SIBI to rebalance some of this inefficiency. And then even looking here, we see all these highs here are kind of flat, right? So we do have some buy side liquidity here. If we want to accumulate, we can go back up and accumulate all the buy side above here, and that will run into that monthly wick. Remember that 25%. And then we can even take out this swing high going into 50% of that monthly upper wick. But if my analysis is correct and we should be going lower on the dollar index, I really don't want to see price take out this swing high. I think taking out this high and going into the monthly 50% of that monthly upper wick is probably as much as I want to see price rally up before we start dropping down lower. So it doesn't necessarily have to go up and take out all the buy side here, but I'm just saying these are all the possibilities, and I wouldn't really want to see price go much higher than 50% of this monthly upper wick. So you may not be trading the dollar directly, but it's important to do the analysis because it is related to other assets that you would trade, like Nasdaq or Euro USD. Remember, the stock market and the dollar index traditionally have an inverse relationship, and same goes for Forex when the second currency pair is US dollar. So I hope you got something out of this one. Let me know by giving this video a like, subscribing for more analysis like this, and until next time traders, safe trading.